But it just makes me think there's a weakness there somewhere. Because when somebody's your biggest customer always and they're the smartest guys in the room, there's risk we're not looking at. And, again, whether this is this cycle or the next cycle or another cycle, who the hell knows? I've realized actually it's nonsense because they're just an extension of the Fed now, because there's no way they can go bust. What I know from markets is, particularly at these points, you look for the path of pain. The path of pain is up. Why? Because everybody's underweight. Everybody. Retail, hedge funds, family offices, institutions, everybody. So everybody's short the upside. So ETH merge, everyone starts buying calls. Why are they buying calls? Because they're still scared that the market could go down, but they can't be caught out if it goes up. It's not like they're record positioned already and they're adding calls for extra leverage. They're doing it because they're terrified of getting back in. So they're buying calls. So we can see this structure going on in the NASDAQ as well. I mean, people like Kotu, 70% cash. That's a problem, because if the NASDAQ keeps doing this, they're massively underperforming. And their job is to be technology investors, not cash managers. So you can do it for periods of time, but if you do it for long, you're going to struggle. So what happens? So the debate is, well, you weren't around in 2018. I've been around since 2013. You weren't around in 2018. 2018, well, goes sideways. Okay, so that's the narrative. I'm like, yeah, but we didn't have this macro backdrop. So I think that's different. So I'm like, so there's demand. And then we've got the ETH merge and everybody's underweight. And everyone's looking at this resistance in ETH between 1800 and 2000. And everyone's going, well, it's never going to clear that. It's going to go straight back down to the new low. That's possible. I'm not saying it's impossible and that I'm definitely right. But I just think, what if it doesn't stop here? What happens if this little pullback is just the pause that refreshes and we go blasting through 2000? Okay, now we've got blind panic, and the people who have to panic first are the hedge funds. Then, once that starts happening, it's the retail, because the merge narrative will now become retail narrative. It's going up from the merge. You've got to be involved in the merge. And then you probably have pullback somewhere around that. I think there is, obviously, the market could go down to new lows. The market could trade sideways. The market could grind higher, or the market could V-shape. For me, the highest probability is the V-shape. And I know that sounds like hopey, but I'm doing it by looking at every participant and their pain points. Now, could be wrong, but only one of those is a new low. We're record oversold. We're right at the levels. Whether we go down 50% from here or we don't, the upside is 10 to 20x on the entire market cap. This is like the best opportunity you're ever going to be given. And people are thinking over the price, was it going to go to a new low? I'm like, you're crazy, guys. This is the opportunity. This is the opportunity you're all waiting for. It's like, zoom out, find me a better risk reward. Sure, you might be able to nail it and get it down to exactly the tick, but for those people who are longer term players, here's the risk reward just laid on the table for you, and people don't want to take it until they're forced to take it because the price is going up. Because everybody was sitting there going, well, Bitcoin's going down to 15,000. Bitcoin's going down to 10,000. ETH's definitely going down to 500. It's like, really? You're all sitting and waiting for it. You're all underweight. Who's the seller? We know that. So the question is why haven't they pulled the trigger? Well, the price has been falling. These people are generally price takers, not price makers. So you are now going to a situation where, let's say ETH is at 3,000. People start to see the bond yields are down at kind of 1.5%, and ETH is yielding 6%, 8%, whatever it's going to start with. This ETH merge is a very, very deal because of it creates benchmark yield for the entire Web3 space. This is like everything else can be priced off it. So it can be ETH plus 400 basis points, which is how the world works. In traditional markets, I think everything should get priced off. Now we can understand what all risk is, and we can trade spreads. So we can now trade risk more efficiently. Part of the issues we've seen is you didn't know what risks was what. Now we can do that. So institutions love yield. They don't like Bitcoin. They don't like Bitcoin because the ESG narrative, and they don't like Bitcoin because it doesn't yield anything. So now you've got cryptocurrency that is basically access to a technology of gigantic proportions that pays a yield and has negative supply. So what is the rate of change and when does it occur? Because that's when we make all the money. Once everybody's in, we don't make all the money. It's everybody coming in that makes the money. And
Absolutely.
So it's the incremental new dollar that flows in that wasn't in the system before that's really interesting to me. And so what you're describing is now a path to exponentiality. Okay, that's kind of interesting, because once you're up at $10 trillion, which is somewhere the magnitude of where we'll be at the next peak of cycle before the Fed start reducing liquidity again, well, $10 trillion, you've pretty much sucked in the sovereign wealth funds too. And again, with their first allocation, because the larger the market cap, the less they're able to ignore it. The
Absolutely.
next cycle up, the first wave of innovators, the next thing is going to happen is the hedge fund space. And what's super interesting to me, there's $4 billion in the digital asset hedge fund industry. It accounts for a small fraction of the market cap. And that means that the secondary market liquidity is minuscule, because players like 3, frankly, nobody's, were the biggest lending provider. So you're like, so there is no secondary market liquidity. $4 billion versus a $3 trillion hedge fund industry. So the next obvious place for pension funds to allocate, and reinsurance companies and insurance companies, all the guys who want to allocate capital to longer term themes, is the hedge fund industry. Because no custody, not daily mark to market, a whole bunch of other funds back in the day. So those are the waves. They start with VC, they get investor approval, they get comfortable, then they come in via the hedge funds, and then they come in everywhere. But most of that comes from the Bitcoin people, because they want the world to burn. So the gold guys are exactly the same. Everything is a scam. Technology is a scam. Technology investors is a scam. Cryptocurrency is a scam. Climate change is a scam. EVs are a scam. Everything is a scam to a gold person. I'm just looking at the Bitcoin chart while I'm looking distracted. I'm just looking at it. I don't think that rounded bottoms are what Bitcoin does. If I'm looking at it, yeah, 2020 was the sideways move, right? I've been around since 2018. No, I've been around since 17, and we all wore that 85% sell-off, and it took ages before the market recovered. You guys have no idea. It's like the Bitcoin cycle, and now you're going to judge 4 data points and assume that you could do everything. All you need to do is look at other stuff, as you said, Amazon, stuff like that, and you can see some sideways, some just go up sharply and then trade sideways for a year and a half in the middle of the trend. There's all different ways. I was working 2000, and I was looking at a mate of mine at GLG. What the hell's this? I've always been a technicals guy. What the hell's this stupid numbers thing? Because it's incredible. And it just come on Bloomberg. And so I started using it. I became addicted to it. I've used it ever since. And I've even persuaded Tom DeMark we've created an entire course as part of the whole Real Vision Academy. The one thing that I think, just moving forward into the future, that people should keep an eye on is everything you think you know about NFTs is nothing. NFTs are basically a unique contract. People use these terms without understanding what that means. An NFT is an unlock for everything from plane tickets to hotel rooms, from concert tickets to insurance policies, everything. And people just still are hooked on what they saw at first, which is artwork and communities. These are magic days that we will all look back with fondness. The craziness of the NFT space, the allow list, the bots, the scams, the projects that become Bored Ape, all of this is what it's like to be somewhere early. Yeah. The days that you look back on with fondness, because people in the NFT market don't even sleep. I don't even know how they keep on top of all of this stuff. But, these are magic days, because in the end it'll become regulated, it'll become, very different than it is now. I just think it's like the first days of startup are always fun, because it's all promise. You don't quite know what you're doing. And then it becomes bone-crunching misery. And but anyway, these are magic times when people have got a grin on their faces, even when they get rug pulled, lose money.